So the first subsection we will learn about first is the expenses, meaning the prepaid expenses and accrued expenses. Okay, first we will look at the adjusting entries for prepaid expenses. Okay, prepaid expenses are expenses, okay, the normal expenses that we paid for that will benefit more than one accounting period. Okay, often occur with regard to expenses like insurance, rent, and advertising, for example. Okay, and then prepaid expenses will be treated as current asset. Okay, it is expenses, but then we pay our expenses in advance. Okay, for this month is January. Okay, for example, in January we already pay our expenses for February and March. Therefore, the amount that we paid for February and March, we cannot record it as expenses in January. We have to record it as prepaid expenses as current asset in January. Okay, instead of record it as expenses for January for 3 months, no, we have to record it as expenses that in January, and then the two advance payment we have to record it as prepaid expenses, and then we record it under the statement of financial position as current asset. So how we want to record the prepaid expenses, the journal entries. Okay, first we have to record the expenses paid first, the usual entries, debit expenses, and then we have to credit in any bank or cash. It depends whether we pay using cash or check, and then we have to record the adjusting entries. Okay, debit prepaid expenses, and then we have to credit expenses. Okay, we take out from the expenses account because the expenses is not incurred yet, it is prepaid, we paid it in advance, so we have to uh, put the advance payment into prepaid expenses account, and then when the time comes, we have to transfer the expenses incurred during the year to statement of profit or loss. Only expenses that incurred for the year. Okay. Okay, in this example, ABC Trading took a yearly insurance policy of 600 ringgit. Okay, 600 ringgit yearly means 600 ringgit per year. Okay, on 1st June 20x2, and then the accounting period ends at 31st December each year. So we have to calculate from June until 31st December. But then the business agreed to pay insurance premium at the rate of 200 ringgit every 4 months. Okay, it makes sense because 200 ringgit for 4 months. Okay, in a year we have 12 months, so times 3 equals to 600 per year. Okay, and then we have to know the payment for each month. So 600 ringgit, okay, we have to divide by 12, and then we get 50 ringgit per month. Okay, 50 ringgit, but then we have to record it. Okay, this is the apa, the table, the payment table lah, payment table from June, okay, up to May 2000 meaning for payment table for a year. Okay, equals to 600 ringgit. Okay, each month the insurance premium incur 50 ringgit. Okay, but then the company paid 200 ringgit every 4 months. So it pay in advance. Okay, for example, this in October, it pay for October, November, December, and January. Okay, October until January, but then the closing account is up until December. Okay, October, November, December is 3 months, so we have 1 month in advance. Okay, 1 month in advance, so the advance payment is 50 ringgit because the expenses incurred is 50 ringgit per month. Okay, we have to recognize the prepaid expenses. So for the year, it's subscribed in June, so we incur June, July, August, September, October, November, and December for 7 months. Okay, the insurance incur for 7 months, so 50 ringgit per month times 50. So the current period, the expenses for the current year is only 350, but then the company paid the total of 400 ringgit. So we have to divide 400 ringgit for 350, the expenses of the current year, and 50 ringgit is the prepaid in advance. So how we want to record these two, we will look in the next slide. Okay, so as mentioned in the prior slide, first we have to record the payment, so the debit, expense, and credit bank, because the company have paid every 4 months, so it paid in June, in this June 1st, and then October 1st, 200 every 4 months. So debit, insurance expense, credit bank as usual, so they have paid for 400 ringgit, but then it incurred just 350, and then 50 ringgit payment in advance. And then we have to record at the end of the year, December 31st, we have to record the advance payment. Okay, that's why we have to debit prepaid insurance. This will go to SOFP, statement of financial position, under current asset. Okay, current asset, because these expenses will incur in X3, and then we have to credit our insurance expense 50 ringgit, because instead of 400 ringgit, the expenses for the current year for 20X2 is only 350, so we have to take out this amount as prepaid expenses. Okay, so we go debit prepaid insurance, and then credit insurance expense 50 ringgit to reduce the amount, and then we recognize the current year expenses 350. Okay, debit profit or loss, this 350 will be transferred into statement of profit or loss under operating expenses, and then credit the insurance expenses, operating expenses. Okay, so after all the journal entries, we will this is the journal, the ledger. When we transfer from the journal, okay, we recognize the payment, and then we take out the prepaid amount, because it will incur in next year, not this year, so we have to take it out. And then the balancing amount, the 350, will go to statement of profit or loss. This is the current year expenses, and then the prepaid amount 50 ringgit, the prepaid amount will go to statement of financial position as part of our current asset. Okay, if in the prior slide we talk about the adjusting entries for prepaid expenses, meaning the expenses that we have paid in advance, okay, for 2 or 3 months in advance. And for this one, it's about our accrued expenses, expenses that have been incurred during the accounting period, but then we have not made the payment yet. Okay, so these expenses should be recorded, and we will treat it as current liability. liabilities. The journal entries for the accrued expenses should be, first we have to record the uh, payment of the expenses. Okay, if there is any payment, debit expenses and credit cash as usual. And then we have to record any accrued expenses, the expenses that should be paid but we not paid it yet. So as debit expenses and then credit accrued expenses, not credit cash because we doesn't pay yet. And then we have to close the entry, close the ledgers, the T account with debit statement of profit or loss, and then credit expenses, transfer all the expenses into under operating expenses in statement of profit or loss. Okay, for example here, the ABC Trading rented a stall on 1st October 2000X2 and then pay monthly 100 ringgit. But then for 31st October payment, 100 ringgit it pays on the October is okay. And then for November, it's pay in November. Okay, it's not accrued. But then for the payment of December, it pays in 5th January. Okay, so when we close our account, this is not paid yet. Okay, but then we have to recognize it as part of our accrued expenses because it is a rental expenses for December that we have to record. Okay, the rental expenses should be recorded as 300 ringgit for October, November and December, but then the payment is only been made for October and November. There's no payment in December, but we have to record the payment in December as our accrued rental expenses. Okay, as mentioned before, the three-step journal entries. First, we have to record any expenses that have been paid for the current year by debit the expenses and then credit the bank. So we record the payment of October and November, and then there's no payment in December. So we have to recognize the accrued rental expenses for December. So debit rental expenses, and then we have to credit accrued rent. This accrued rent later will be transferred to statement of financial position as part of our current liabilities. Okay, and then we have to transfer the total of rent expenses or rental expenses 300 ringgit for the month of October, November and December in our statement of profit or loss. Okay, same goes. This is the ledger for the rental expenses. Recognize the payment, and then for October and November, and then we have to recognize the payment that should be made, but the company doesn't pay yet, so we have to record it as accrued rental. Okay, and then this the total amount of expenses should be transferred in under operating expenses in our statement of profit or loss account. And then we have to transfer the accrued rental account in the statement of financial position here, 100 ringgit as part of our current liability. And then as for our statement of profit or loss, we have to recognize the total of rental expenses for the year for October, November and December, so for 300 ringgit.